U.S. job growth in January was weaker than expected, according to the latest data from the Bureau of Labor Statistics. 143,000 jobs were added to the U.S. economy last month, 27,000 less than expected. The unemployment rate fell slightly to 4%. CBS News MoneyWatch correspondent Kelly O'Grady joins us now in studio. So, Kelly, what does this tell you about the current labor market?
So I would say we're still in a relatively strong place, but we are slowing down. So while that number did come in lower than expected, the December number was actually revised upward. Remember, we already beat expectations there. We actually added 307,000 jobs. So kind of we're still in a decent place. Two things I want to point out. The unemployment rate lowering to 4%. That tells me people are not quitting. And one of the reasons is it takes so long for people to find a job when they are out of work. I've said this to you a number of times. I've seen your eyes pop 10 to 12 months. The other thing is wages are growing faster than inflation and they're picking up. So that is some good news. So all in all, I would say strong, but slowing.
How does this contribute to the stock performance today?
It was a little bit, but honestly, there wasn't much movement in the beginning of the day. The sell-off was really more about these potential reciprocal tariffs that President Trump mentioned during that news conference, as well as consumer sentiment that came out. People expect inflation to be at 4.3% in a year. So there's a lot of concern.
It's between 2.8 and 2.9
I know,
now, right?
And so that sent investors selling off because that was, I mean, again, it's consumer sentiment. It's where people think it will be. But certainly
investors say if consumers are thinking it's going to be worse, maybe they won't spend as much.
Exactly.
Okay, so what does this mean for the Fed's decision when it comes to rates?
Well, we are not getting an interest rate cut in March, and we didn't expect to get one. We had a pause last month. We are expecting 2 interest rate cuts this year. Today's jobs report basically tells you we should hold on interest rate cuts for a bit.
Okay. President Trump making several surprising remarks. We can dig into those reciprocal tariffs in a second. But first, let's talk about U.S. Steel. Nippon Steel making an investment instead of taking it over. What is significant about that in your world?
So this is good news for U.S. Steel if this does indeed happen. We don't have the specifics of the deal that does seem to be still being worked out, but they need money. And so them being able to stay afloat and not having to lay off tons of people would be good.
What would be in it for Nippon Steel to sink a bunch of money into U.S. Steel but not have a controlling voice?
Access to the U.S. market. And also, let's think about this on a country level. It seems like that might have been worked out between the Japanese prime minister as well as President Trump. So we are just seeing more investment and a closer relationship between Japan and the U.S.
What will you be watching for next week when it comes to those reciprocal tariffs?
How big the tariffs that we place on the nations are. I mean, some of the nations, we're talking Chad, we're talking Bermuda, not nations that we have a ton of trade with, but maybe there are some.
Can you explain what a reciprocal tariff is?
Okay, so if you're Chad and you tax me, the U.S., when you're importing goods, the U.S. is going to say,
tariff on you.
Exactly. The U.S. is going to say, well, now we're going to tax your goods when we're importing them by 10%. So, again, that trade war, tit for tat.
Okay. Kelly O'Grady, thank you.